for you every Sunday afternoon and 24/7 at davejanda.com with the other 3 to 4 to 5 video format shows I do every week on the subscription side, as well as a tremendous amount of free public information at davejanda.com. Please stop on by. I assure you, you will never be disappointed with the information you obtain there. You might not be particularly pleased because it's information that you need to know and it might not be what you want to hear. But it is information that I gather utilizing the resources and the sources that I've developed over the past 38 years in dealing in public policy. And my sources come from behind the curtain, not just in our government, but in a number of governments around the world. It's information I can't discuss on the radio, not because of Wham. Wham's a free speech zone, but because of the choke points, deep state choke points in the FCC that would take Wham's license away. And I surely can't speak about it. I'm already shadow banned enough, targeted, censored on every social media platform. So surely we can't do it there because of the deep state choke points in every social media platform, which is why davejanda.com exists. We hope that you'll join us every day with the new information that we post. Well, as we mentioned earlier in the show, we are going through quite the financial turmoil, and that is not by accident, right? The more tumultuous financial markets are, the more people and with the volatility throw their hands up in the air and say, "Oh, I can't go near that gold and silver because why? They go up and high and then they come crashing down and back up and down. I can't." And that's what the syndicate wants. They want you in their paper vapor assets. Oh, I'll just buy treasury bills. I'll just buy some bonds. I'll just buy some stocks, all of which have debt associated. That's what they want. And our next guest is someone who has told you about this volatility coming, and in fact, more volatility to come. But well, in the end, volatility could well play in your hands in a positive way. And he's warned us for years about somewhere down the line there is going to be a failure to deliver of, if you will, the financial policy that everyone should hold, that being physical gold and physical silver. And they're going to try to shake everybody out of it before it really escalates in price. He's warned us. And he's warned us there's going to be this failure to deliver, and he's back with us. And I can't think of a better person to have back with us, considering what happened on January 30th, January 29th, January 30th, February 4th, to dissect what's really going on behind the curtain, as Bill Holter. After a lengthy career in financial services, Bill retired in 2006, moved his family out of the United States, then returned in 2011 back to his home in the great state of Texas. Bill joined Miles Franklin as an associate writer in 2012. He is a precious metals broker as well at Miles Franklin, milesfranklin.com. And Bill provides great insight and great information on his website, which you can also reach him through at billholter, HOLTER.com. Bottom line, folks, Bill is one of the best forensic economic analysts in the world. It's my privilege, pleasure, and honor. And by the way, he's also known, his partner, God rest his soul, who I know is looking down on us from heaven, Jim Sinclair, was known as Mr. Gold, and when Jim passed, that title was passed on to Bill. So it is my privilege, pleasure, and honor to have the 2026 Mr. Gold, Bill Holter, with us today. Bill, welcome back.
Thanks for having me, Dave.
Okay, Bill, dissect for us your take on the takedown. They first tried it on January 29th with a tremendous amount of unbacked paper fraudulent contracts that they sold short. They just printed out of thin air. And that didn't work. The prices of gold and silver bounced back. So then they really unloaded on Friday, January 30th, which brought the price down of silver from the low 120s down to around 77, 78. And then it started, much to the chagrin of the banksters, because they're trying to cover their already criminal egregious short positions, it started popping back up to 92. And then all of a sudden, we had another paper-based elevator shaft down into, they actually brought it down into overnight in Asian trading on Thursday down to the mid to low 60s, and then it popped back up on Friday up to 77 and change. So, Bill, give us your take on this tremendous volatility and what's really going on and what's really happening behind the curtain.
Yeah, Dave, let me start with this. This is the rally you do not sell. You don't sell it because you may not be able to get back in. And we'll talk about the failure to deliver. You're absolutely right. Unbacked contracts were absolutely dumped on the market. They dumped, I believe the number was $1.3, $1.4 billion worth of silver in a very short period of time. And just understand that they're contracts that cannot perform. Mm-hmm. Because if those contracts are open going into final notice day, the silver simply does not exist to deliver those shares. And by the way, I misspoke. I said $1.3 billion. It was 1.3 billion ounces. Mm-hmm. And the world only produces 850 million ounces a year. Now, why is this done? Exactly as you were talking in the intro, they want to scare people away from gold and silver. Mm-hmm. They want to temper the demand. They've done it throughout the years. You saw when they created SLV and GLD. Those were, if you want to call them pressure relief valves, it made it easy for people to push a button and buy what they believe is gold or believe is silver, and it's not. The ETFs, they don't even have to hold any gold. They can hold 100% contracts as per their prospectus. So it's a relief valve that's been used for years, and I also believe that crypto has acted as a relief valve. But the way it stands right now, last month there was over 40 million ounces of silver delivered off of COMEX, and that is a non-delivery month. It typically gets more or less 1 million, maybe 2 million ounces for delivery. Same thing this month. We're only 6-7 days into it, and there's already 15. I saw this on Thursday. I don't know what Friday's numbers were, but as of Thursday, there was 15 million ounces, and again, February is not a delivery month. There's only 103 million ounces in COMEX. That's what they claim. And is that all for real? We don't know, but let's take that at face value. March is a main delivery month. There's 4 during the year. And to see 100 million plus ounces stand for delivery, that would not be any surprise whatsoever. And if that's the case, then there are going to be some people playing the game of musical chairs where there's no chair.
So, Bill, what would we see? So what would we see happening? What are the red flags, the warning signs that we're going to see as the month of February and the beginning of March roll out about a failure to deliver situation that you describe, and educate all of us on how a failure of delivery plays out?
First, we're going to want to see what the final standing is for February. It's 15 million ounces now. Is it 30 million ounces? Is it 50 million ounces? Who knows? We'll watch. We'll see how many new contracts are opened that are demanding delivery right away. That's for February. And then it's going to be pretty important to see what the first notice day is for March. Is first notice day 50 or 60 million ounces? I'm going to say if it's 60 million or more ounces, we're going to get over 100 for the month. And if we get over 100 for the month, you're only looking at 103 million ounce purported inventory. Now, if they do fail to deliver on silver, gold will immediately skyrocket in price. You will see immediate standing for delivery in the gold market, and that will fail to deliver. That will be 2 COMEX contracts that basically are proven as fraudulent. And what happens then is You've got players in credit markets, in treasuries, euros, etc. You've got players in all the other commodities, and they all wonder, is that contract also fraudulent? What it will do is it will break trust. And in a confidence game, and that's what this is, it's a con game. Once trust is broken, it's very hard to get back, but once trust is broken, then the credit markets start to sputter. And we've talked about it many times. The entire financial world, and more importantly, the real economy, cannot function without credit.
Bill, you have been involved in the financial analytics game for decades. In your career, have you ever seen the situation in precious metals to be at this degree as far as the bankers, or the banksters as we call them, being behind the eight ball?
Not to this extent. We did see it in 2007, 2008 with Bear Stearns. They were short a massive amount of silver, and that was purportedly taken over by J.P. Morgan when they were merged into Morgan. And then again, in 2013, what we saw was absolute egregious selling of paper contracts to the point where they pushed paper down to $9, and you could not buy an ounce anywhere in the world for less than 15.
So, Bill, they're behind the eight ball. And what do you believe the banksters' next, and it's not fair to call it a trick, what's their next criminal operation they're going to try to pull to try to save themselves at this point?
There may be some type of a false flag in the supply chain. Hmm. I mean, that's very possible, and the COMEX will step up and say force majeure. You know, an act of God, or an act that we have no control over, precludes us from delivering, and they're going to try to deliver paper. In other words, try to deliver currency, dollars, in lieu of ounces. So I think that's the way they'll do it. They won't just shut down. They're going to declare force majeure. And that is, you know, if you're getting dollars and you're asking for silver, that's a fail to deliver what the contract says it's going to deliver.
So, Bill, let's give for example, as we are doing this live broadcast, there has yet to be a potential attack in Iran. Yet we see this huge movement of not just carriers, but of personnel, of tankers and the like. Let's say there actually is an attack on Iran, and then Iran has a counterattack. That could be used as a fig leaf for the COMEX to step in and go, oh, because of this, correct. Wow. Am I off on that?
No, that's correct. They would not immediately step in. They would step in after there's some official announcement that we're at war for military and technological uses. We need silver, meaning the U.S. government. We need silver. You can't buy any. Mm-hmm. So that's a possibility.
So
but just understand if that happens, that silver just became way, way, way more valuable than that morning, even if it's standing at $100, $150 an ounce.
So, Bill, they might cloak their criminality and their failure to be able to deliver because of these fake paper contracts they've developed without physical. They might say, we're so patriotic at COMEX, well, we can't deliver in our contracts, not because they're fraudulent. We can't deliver on them because, you know why? Because we're patriotic and we're sending all this silver that's used in cruise missiles and technology. We're sending all this to the military and the government because we're so patriotic. Bill.
I agree.
And it's all a con. And it's all a con.
Yes.
All right. So that happens. So now those came contracts, and it's in the fine print, I believe, they can, as you say, settle for cash. So they say, yeah, the current price, because we hammered it down in our manipulation, is now $77. So yeah, we'll pay you that. Meanwhile, if the true physical price could be significantly, I'm not going to say exponentially, but significantly higher than that, correct?
Sure. It could be 150, 200, could be more. Who knows?
But all those people holding those paper vapor contracts that think, oh my gosh, I'm going to get $150, they're going to end up getting 77 or whatever. That's the cash settlement, right?
Right.
And Bill, there's a historical precedence of this happening in the nickel market a little over a year ago. Is it true?
Yeah, nickel I think was roughly 2 years ago. Same exact setup. Nickel, it turned out the supplies had been sold 6 or 7 times over, and there was blood in the water. I mean, the traders knew that there's no way that they could be delivered on, and nickel exploded over a 48-hour period of time, tripled in price, and on the opening of the third day, it didn't open, and they said all the trades from the last 2 days are canceled.
And to those people that are saying, well, wait, they should sue. Well, you have to have a court that says, yeah, right? People tried to take it to court, and the court essentially said, nah, sorry, it was in the fine print, you lose, right?
Pretty much.
All right.
Yeah, Dave, that's why I started this whole thing off today with, this is the rally you do not sell. Stop trading. Do not think that you're smart enough, cute enough, whatever, that you can sell at whatever price you decide to sell at, and you're going to get back in, because if we go through a failure to deliver, then silver basically becomes unobtainable.
Meanwhile, the physical silver is moving from west to east. And I don't mean like California to New York. I mean from the United States in the west to the Far East, such as Shanghai, Singapore, Beijing. Is that a fair statement, Bill?
100% correct.
And the significance of that. And the significance of that.
Well, we've seen the spread between the Shanghai price, the India price, and the COMEX price. It's been anywhere. Right now, it's standing at about $4 or $5, but it was as high as $21, $22. Mm-hmm. There's no way an arbitrage like that should ever exist for more than 30 seconds, because traders will jump in, they'll sell it in China, and they'll buy it in New York, and they'll buy it in London. The reason that gap still exists is because traders are fearful of buying contracts in the West not being delivered on, and then the price explodes, yet they've already sold in Shanghai. So they don't get delivered on in the West, and they get destroyed in the Eastern markets where they've sold.
Folks, we're speaking with Bill Holter, BillHolter.com and MilesFranklin.com. As I mentioned, Bill, in your introduction, you are a trader, and you do help folks procure precious metals through Miles Franklin. What is the availability currently of gold and silver? Because here's one of the problems I get from people emailing me. Say, Dave, I heard Jim Cramer. Tell me the last time Cramer was right about anything. Globalist shill. I heard Jim Cramer on CNBS say he thinks silver's going down to 50. And I'm going to wait till it goes down to 50. All right, well, okay. So to those people that are saying, I'm going to wait it out, where are we with the availability? If it does go down further, what's the availability, Bill?
Well, I would first ask, did Cramer tell you that silver was going to go to 125 in the first place?
Never.
The answer is no. Availability is getting tighter, especially in silver. The availability of Eagles, the premium on Eagles 2 or 3 weeks ago was $6 or $7. Now you're looking at anywhere from $12 to $15. Perth mint has stopped shipping. The availability is definitely tighter, with the exception of junk silver. Junk silver is bid horribly right now. If you want to sell it, you can buy it pretty close to spot. And the reason being, Americans, the only way to buy silver in the 1970s and 80s was to buy pre-1965 dimes, quarters, half dollars. That was the avenue. There was no such thing as an eagle at the time. So all those people who bought back in the 70s and 80s, they see silver go through $50 or approach 50 and go through $50. We had just massive amounts of sellers, and the dealers do not want to hold the inventory. So what they do is they take that bag of junk, they send it to a refiner, refine it out, and get back the pure silver is sold for technology, military, medicinal, et cetera, et cetera. The problem is refiners are now backed up 6 to 8 weeks. And 6 to 8 weeks waiting to get paid on a trade, it might as well be years.
And what about demand? That's the supply side. Where are we on the demand side?
I can tell you the amount of buying on the Friday and then buying the following Monday, where they smashed it on Friday. I mean, I can just speak for Miles Franklin, we were overwhelmed. And just so you can see how overwhelmed this has gotten, we are anywhere from 4 to 6 weeks, and these are products we have in stock, but we are 4 to 6 weeks backed up on shipping just because of the sheer number of orders.
Bill, in our final minute together today, educate our listeners in how they can get more Bill Holter and get in touch with you.
Yeah, you can just go to my website, billholter.com. There is a contact button there. You can sign up so that every time I post anything, you get notified. If you want to contact me directly, you can either go through the site or go to my email, my business email, BHOLTER @proton.me.